Hey everybody, Kimosabi here, giving you a little update for getting stopped out earlier today. Not a problem. The interesting thing is where I drew those 50% of those wicks on the top and bottom are currently kind of governing the range. You see we rejected there and we found support there. And that's just a simple technique of measuring halfway on those wicks and finding the strong buyers at the bottoms of the wicks and the strong sellers at the tops of the wicks. And the 50% mark is where I kind of denote where the strong and the weak kind of live. Just looking here on the daily chart, I'm seeing right there an order block sell setup. So let's go ahead and mark that off right there. 99, basically $99,900 would be the area to look for rejection at this current level. Uh, this daily wick that came down, you see this one retraced 50%, found the strong buyers there. So the same thing that applied on this wick applied on this wick as well. Give you your buy setup. You did make a higher high on a 1 hour to give you that buy. Stop loss at the low, of course. Let's zoom into a 4-hour chart. See here on the 4-hour chart, still have that order block at 99,900 listed, but we have the wicks again, and we can take a measurement of those wicks from the top of the wick to the bottom of the wick. And there you go. Touch the 50%. Let's zoom into that so you can see it. 0.5, and that's where the wick landed. This wick probably did something fairly similar. And now my expectation is to get rejection at the upper wick up there. So I'll just measure half of that wick. Um, right there. So half of that wick is 99,252. So I would look for supply to come in right there. Right there, 99,252, 262, somewhere around there. And then you'd be taking all this liquidity, checking that wick, see if there's strong sellers that are still in there. What we'd like to see, if we want price to go up, is price to push from this area, kind of push deeper into those strong sellers and kind of get rid of some of them and pull back and maybe close 4-hour higher than 99,500 or so. Kind of get a higher high on a 4-hour higher than that high, or even better, get above the 101. Get a daily candle close above that 101. It wouldn't take long before we start ripping upward, I would think. And just looking at this, I'm kind of starting to have the idea that the market makers are going to make some type of triangle here. And that is a method of a maximum liquidity. I'm going to just do it like that. And that would coincide with those sell setups that I'm kind of anticipating inside that wick. Kind of get up there, touch up there, come back down, touch down there, and kind of maybe break up or break down. Whichever way triangles break, they usually revisit the other side because you've got the liquidity. They don't have to. They certainly don't have to. In a very, very bullish trend, you'll just have it break up and run if it's time to do so. And in a bearish trend, you would break down. However, if you do see this triangle break down and reach a 1-to-1 target somewhere around 88,000, somewhere probably around December 18th, if I had to guess, you would likely see this come right back up into the middle of the triangle and then break upward. And that would be a reaccumulation. They call it the apex in Wyckoff method. Yeah, somewhere around probably the 12th. Yeah, the apex of the triangle, because you're building liquidity down here. Stop losses there, stop losses there. We're building some stop losses in this area, and these all have stop losses on the other end. So that gives you maximum liquidity since you've cleared the liquidity to the upside with that high and cleared a lot of the liquidity to the downside with that low. So maybe it builds liquidity again because the market maker doesn't have enough in this area. Just a thought and an idea, so this might take some time. And I was looking at it and just thinking about today, the comparison of the chart from November of 2023 last year to current November and December area, and how we're not necessarily painting the same picture, but it's acting very similarly in the fact that you have higher highs and higher lows. Now we do have a 4-hour chart here above. Let me change that to a daily. There we go. So on the daily time frame, you had higher high, higher low, higher high, higher low, all throughout here. You didn't make any daily lower low, lower swing lows, and just kind of trudged up until a peak up at 44,000 before a month-long consolidation. And we're kind of doing something very similar here where we have the higher highs and higher lows throughout on a daily closing basis. So maybe we're just trucking along right here, kind of pushing, and then we flush up real quick before a month-long consolidation, maybe, if we have time to do that. I point that out because it's very important to pay attention to the closing price of higher highs and higher lows. And we did get that still even today. We still don't have a lower low close on a daily. That's still higher by a couple $100. It might be losing steam, but it's still a higher low after making a higher high. So that's what this trend did back last year, and you could short it and make some money on those moves down, but the real move was upward. But if you know what you're doing and you know where the sell setups are, you can certainly take those. However, generally, you just want to buy the higher lows, take profits, buy the higher low, take some profits, buy the higher low, take some profits. I mean, that's kind of what I've been doing in this range. As soon as it gives you some profits or gives you some kind of sell setup where supply is likely to come in at some point, take some profits. I mean, just take a little 20%, 10% if you like, whatever's going to cover your stop loss, but pay attention to the trend. You may feel like you're missing out on a large move down, or even this large move down, but you don't really have a setup to say that it's going down on a significant time frame. You could probably get it on an hourly, but if you trade in the direction of the trend, you'll be right more often than not. So just trade in the direction of the trend. The trend is up right now. So you want to look for the buy setups where they come, and as soon as it comes to an area of interest, i.e. where you've marked off before, like this 94.530 area, marked off before, so when price reached there, I knew what to look for. And I looked for some volume, I looked for some bouncing, and I took some in there, already took some profits off, and looking to get more exposure to sell at 99.300 area. Look for rejection there. So kind of what I'm looking at, kind of the idea that I'm tinkering with. But yeah, trend is still up for now. Since we've got a higher low, let's get a higher high. And yeah, keep your stop losses tight. Stop loss should probably be at 95.5 by now. But yes, definitely don't want to see below that 94 again. Though we might tag it out just to wick it out and then go. So watch for that. Definite invalidation below this 91. I don't want to see any price below that 91. If price does go below 91, there's a lot of liquidity down there that's likely to get hit very, very quickly. So you're probably going to 85. So careful buying them dips. Bring it down to a 2-hour chart. Like, these dips happen pretty quickly, and you got to think how the market is probably conditioning you to just blindly catch a falling knife. Whereas I would say, if you're going to do that, do it very small. Put a very small piece on. Look for a proper buy setup thereafter. Like, I don't like to catch a falling knife myself. I'd rather buy it a little higher and have a higher probability setup that I can go a little heavier in. But I can't go heavy on a falling knife because it could just keep falling. And that's how you get all knifed up. Now, just looking at this on the 2-hour here, we have a low, a high. Looks like we're almost putting in a higher low here. I'd like to see this get up a little bit higher before declaring that, but doesn't look bad. Let's get a 2-hour close, higher high, and then keep pushing into those sell setups. Or higher. Hey, they can keep running. And how do you add if it does start running? Hey, if we close a daily candle like today above like 103, 104, your entry would actually be right here at 101, 150. This would be considered a breaker block. And if this goes with an engulfing candle, that would also be an order block. So fairly high probability add there, as long as you have somewhere to manage the risk from. So breaker blocks, you can buy that at 101, 165 if the daily closes above there today. It could probably close there in the next 3 days. That buy setup probably works as well. So I guess that's it for now. Still looking for higher until the daily closes a lower low. If you get a daily close, lower low, like lower than these lows or lower than 95.8, daily close down there, bad news bears. You probably have a lower low, sell the lower high, and then you're going down. But as long as the daily is in an uptrend, look for the 4-hour to start an uptrend, and then the 1-hour and then the 15-minute, get that alignment, and then the race car starts driving. Yeah, so have a good night and keep your stops tight.